So this is the start of my portfolio. Um, I am pretty new to this, obviously. I have a 401k, so I'm doing that. Firstly, I want to talk about Annaly. It was my first stock pick just due to the cost and the high yield, and it could get me an extra quarter just for 400 bucks, which seemed like a good deal. But if it went up in stock price, back to what it was saying was a year ago when I first purchased it, which was $14 to $15, that could be a huge gain. But it seems like it's starting to go the other way with all these mergers you see. So I really kind of want to get out of this, I think. I was just gonna hold it forever. If I lose it, I lose it. It's 400 bucks that I got for free, so might as well. That could be huge, but I don't know. Maybe come back to it. I guess I've spent money on stupider things, as you know, like Tormagoyf. Anyone? So what I did is I looked at the key statistics here. They are making profit. They are generating revenue. They are, obviously seemingly stable, I think, but their expected growth is to go down. I'm assuming because of the COVID. 22 cents a quarter isn't too high, but it's also, it is 10% of the stock price, which is really cheap. The payout ratio is really what had me worried. How could they run a business that's paying out so much money? But for a little bit of further research, I noticed that seemingly that sometimes happens with REITs. Say they bought a new business or something, then it goes into their expenses as well. I don't really know. I don't know. It's tricky for me because I'm new. But overall, this seemed like a really good stock. I think I'm gonna sell out of it and go with something safer. I don't know. I don't know how mergers work. So then there's Philip Morris, the cigarette company, Marlboro, which is one of my favorite cigarettes if I smoke. Mostly they had consistent numbers, and to me, there's always going to be old smokers, people who just are older and they smoke, new smokers, and then people who have quit and return to smoking. So that kind of influences that. You can see the profit margin there. It's pretty good. Debt to capital. I didn't realize they had so much debt, but so they are making money. They are generating revenue. Seems like their earnings, they're pretty accurate on their earnings. They know what they're going to be getting more or less. Very consistent. Payout ratio 93%. The dividend rate is pretty high, and what you'll be getting $5 back a year is pretty good. 120 a quarter seems pretty good to me. It's just so expensive. Like I can only buy like one of these maybe a paycheck, and that's if I get a better paycheck. So I'm not so sure about that one. The goal here is to like buy enough shares to be able to every quarter get more of that share. This one right here looks really good, other than that fact that it has spiked down recently, and I have enough shares to the point where the losses could have bought a whole nother share, which is a little bit depressing because, oh buddy, wouldn't I love more shares. They have pretty high yield. It's a smaller company, $270 million compared to billion, which is, okay, I'm fine with that. From further research, apparently they want to be a $300 stock company. So, benefiting. Profit margin, huge profit margin. Debt to capital, pretty low. So that's looking really good. Again, these guys are pretty consistent. Not too much spikes, not too much growth, but it is growing, which is a good sign. The dividends, expected growth 38%. Dividends right here, 164. That's a pretty high ratio. 7%, almost 8%. 41 cents a quarter per share for 20 bucks really isn't too bad. 25 bucks, not too bad. I could take that. Mostly it seems fairly stable. I just don't know much about the lending companies. Frankly, I don't agree with people making money off of lending people money, because people, when they're in need, they need that money, but it is what it is, and they've built a business off of it. So, the biggest thing is I've lost that money on those shares, or but look at that. That's so awful. But I guess now would be a time to buy more if I really wanted to full all in on this and start making it so it can buy itself each quarter. But I am broke with my $15 $15 right now. Overall, I'm thinking about selling the NLE. I did hit the ex-dividend date, so I will be getting the dividend. I'm assuming that's why the stock is dipping so much. But overall, it seems pretty, like, because then if I could sell it even for, see, let me show you. Tried to sell it today. That would have been, 40 cents a share bonus, other than like one of the shares. That would have been pretty good for me. And then I could have bought into a safer stock. I guess thank you for watching. If you like this kind of stuff, like and comment. Tell me what I'm messing up on and what I could look for, if I'm evaluating right or wrong. Bye.